Let's cast our eyes now to the markets and see how they are performing. The Johannesburg Stock Exchange is firmer in midday trade, with its global peers mixed as markets mulled over inflation concerns. Meanwhile, China is considering raising power prices for industrial consumers to help ease the growing supply crunch. To help us talk through the latest market news as well as the business stories, we're joined now by Karl Gevers. He is the portfolio manager and co-founder at Benguela Global Fund Managers. Mr. Gevers, good to have you with us on the Daytime Update today. Perhaps let's start with you giving us a sense of how the markets are performing and what exactly is driving those market moves.
Yeah, good afternoon. Certainly, as you said, mixed markets with the local all-share index marginally up at the moment, about 0.1%, mainly driven by the resource sector. That's up about 1.5%, but the industrials and financials down 1% and 0.5% respectively. It is the end of the month, end of the quarter, so sometimes one does see some bigger market moves, but September has been a tough month overall, with the all-share lagging 3%, but globally it's been the same picture, and that's been after a pretty strong recovery for prior to that for the year. The rand remains weaker today, and the main reason there is the stronger dollar, and as you mentioned, the inflation concerns, and also the expectation of the US Fed to taper their bond asset purchase program. So yeah, we're seeing the markets are mixed at the moment, and yeah, globally we're seeing the same picture.
If we look at oil prices, not looking too good today. They did fall, extending losses even further. What is behind those moves?
Yeah, so oil month to date is actually reasonably strong, up 10%, lagging coal, another energy source that had a very strong month, up 30%. The main reason for oil's short-term weakness, coming back to below $80 per barrel, has been the OPEC intention to add another 400,000 barrels per day and from November, and that seems to be still on the cards. So I think the increase in supply just definitely putting a bit of a dampener on the strong price overall, and that rebound has been on the back of that demand increase with the recovery in terms of economic activity globally.
We've also seen the release of Northern Platinum's annual results for the year ended 30th of June 2021, as well as notice of the annual general meeting. Talk us through that particular performance.
Yeah, a very strong result by Northern. Headline earnings per share of 26.88 rand, in line with the trading statement and pretty much in line with what the market expected. The share has been trading up about 2% today. It benefited from the stronger Rand Platinum Group metals price or basket price, as well as a 34% increase in production year on year for Northern. So that's, in terms of operations, quite a good result, given that they have to still operate within the COVID restrictions. So they've managed to grow production quite nicely. The one area of concern would be the fact that they're not paying a dividend, given the strong cash flows that they've seen. But the main reason there is that they've spent quite a bit on share buybacks with the wind-up of the Zambezi empowerment vehicle. And yeah, I think overall a good result, and shareholders should be quite happy with that.
Now, Stats SA has released South Africa's Producer Price Index for August. What are those numbers looking like, and what does this data tell us about overall factory output?
Yeah, I mean, the August PPI numbers are in line with expectations at 7.2% for August year on year. It does highlight that there are cost pressures that the producers are seeing, mainly on the back of fuel. You've seen electricity increases, and metals and equipment also driving that inflation. And what we see is that the PPI eventually also puts pressure on the consumer price index inflation. So I think we certainly will continue to see some inflationary pressures in the market, but within expectations. So it's not a surprise at all.
I mean, this is quite an exciting move. We see the Cape Town Stock Exchange opening business today. Now, they're pledging to lure firms from across the African continent with listing costs that are a third of what is being charged by the Johannesburg Stock Exchange. Do you think they will be successful in this bid, and what do you make of this launch?
Yeah, so it's essentially a change of location for the previously called A4X, which was based in Parktown, so relocated to Cape Town and renamed and rebranded to Cape Town Stock Exchange, which is, as you said, quite an exciting development. I think it's very important for smaller companies to have a place to raise capital and to list, and that's exactly what the target market for the Cape Town Stock Exchange would be, and also focusing on the tech side of things. Currently, they've got 7 companies listed, and hoping to double that over the next few months. So I think certainly it's an area where the JSE has struggled, to attract listings and smaller listings, where hopefully the Cape Town Stock Exchange can do the trick.
Mr. Karl Gevers, thank you once again for your time in breaking down the markets for us on this Thursday afternoon. He is a portfolio manager and co-founder at Benguela Global Fund Managers.